Hi traders, this is Blake Morrow. You were listening to the Morning Edge webinar. I want to welcome you all and happy FOMC day today. So we have actually a lot of information on the docket, a lot of um, a lot of information that's coming out today, a lot of economic data. So we have producer prices. Excuse me, really quick. We have producer prices. We have Empire State manufacturing capacity utilization, industrial production, crude oil inventories. We have dairy auction results coming out of New Zealand, out of Fonterra, from Fonterra. We have manufacturing sales out of Canada. We have the FOMC, and then a little bit later today we have the New Zealand GDP numbers. So it's going to be a very, very busy day for the market. As I was talking with Paul Franco a little bit earlier, SPZ trader, regarding the Fed. I mean, no one's expecting the Fed to make a move today, obviously, but how the Fed positions themselves for next month is going to be key. I've long time over the last month or two have really said that the only way that the Fed is really going to raise rates in July is going to be without a Brexit. So we'd have to, the UK is going to have to stay in the EU, and then also we're going to have to see an improvement in the jobs picture, which we'll get here in a couple of weeks for the month of June. Now, that's a pretty high bar for the Fed to actually raise rates in July, but I think they want to leave that door open, and so today is about leaving that door open, and if they're going to leave the door ajar or not. I think a couple of things we have to look at is we have to take into account the dot plot, and see if the Fed is still forecasting a couple more rate hikes for the remainder of this year. We have to look at the dissenters. Is Esther George going to continue to dissent? Are there going to be more dissenters joining in this time around? To make the vote instead of 9-1, maybe 8-1, or something. To that extent. And so seeing if like Rosengren dissents, or we have some situation like that, which alludes us to, or gets us to believe that there might be the Fed starting to shift gears towards a more tightening bias, and that to me is going to be really critical today. So it's not about if the Fed's going to raise rates today or not, because it would obviously be a very big shock to the system. I said something in our chat room yesterday about how about if the Fed actually raised rates tomorrow, which would have been today. They raise rates just as a precautionary measure to possibly cut them again if they needed to. And I'll tell you, if I was Fed governor, I probably would do that. Now that's probably a great reason that I will never be a Fed governor, because I would have just raised rates and screw the market. But I have some ammunition in my tool. I have a few tools in my toolbox to use in case of an emergency. But that's me, and that's exactly the reason why I would never be Fed governor, because I'd make stupid decisions like that. But the Fed's not going to do anything today. We all know that, and if they did, it would be an extreme shock to the system. But it's just not going to happen. What we have to pay attention to, though, is again, we have to look at the projections of the Fed, and we have to pay attention to the possible dissenters out there, and see if there has been any shift inside of the Fed governors. Now, what we're going to do, as we always do, is we're going to prepare for today's action, because there's a lot of it coming today, by doing analysis of all the currencies. So we're going to fill out our bias chart. Matter of fact, let me do this really quick, because I keep typing this in every day, and I have been for it seems like the last several years, and I'm gonna save it. So just because we do this every single day, let's go save that. All right, now let's start with the euro dollar. and let's analyze the euro. And one of the things about the euro dollar that I've noticed is that the euro dollar, the bounce has been um, very small today. All right, and you've seen the dollar really pull back against a lot of currencies. You've had the cable bounce back. We noticed the really I want to say outperformance of the cable yesterday, where all these Brexit polls kept coming out showing that the Leave camp was gaining steam. The pound stopped going down, and because of that, I picked up the pound Swiss yesterday. I know a couple of you guys did as well. I got out of it earlier this morning when it was above 137. Took some profits there in the pound Swiss. And by the way, just so you all know, I only have $1 position on right now, and that is short the Kiwi. And I shorted the Kiwi this morning. Cost average is at 70.40 right now. So I just shorted it, my two pieces of it, which is still just a half-size position. I've shorted that this morning, but that's my only dollar position right now. Okay, and I'm a little hesitant about trading the dollar at this point in time because I'm really, after being on the short side of the euro a couple of times, and after we've been up here at 114, now that we're down at 112, it's a much harder decision to make to be on the short side of the euro at this stage in the game. After you've had a couple hundred pip drop just over the last week, it's like, okay, well, do you really want to short it down here? The flip side is, do you really want to be long ahead of the Fed if the Fed is indeed going to, keep the door open for July? Now, I will tell you this, that the euro dollar stalled at really critical support. You can see that we hit a 786 retracement of this move here. We did not hit the 786 of this move, but this trend line that one of our traders yesterday had, and who did that yesterday? One of our traders listening here had mentioned that. Now I should go back and take a look. Crap, I forget who it was, but we had this trend line drawn in from over here, and one of the traders said, "Hey Blake, shouldn't you extend that trend line across?" And I said, we could, and we were here yesterday. We were looking like this, and I said, what? Let's extend that, and we did, and lo and behold, the euro's held. And so, the great news is, with the euro right at this moment in time, your risk reward favors along here. I mean, look, you're risking basically below 111.80, right? And your reward would probably be back up at 113. As Paul stated, I think that 113 level is going to be a great short if we can get up there. So, in other words, I'd rather be on the short side of the euro up here than down here. Okay. But the flip side is, if you want to get on the long side, you can, you do it down here, because if you break through this support, that's when you know that the euro is going to retest probably 111, and maybe even lower than that. So my opinion is, if you want to be along the euro right now is the right time to do it. Okay, because your stops or your risk is manageable, right? If you get long here, your risk is below here. The flip side is, if you want to short it, being short at 113 or a break below 111.85, that's the way to do it. Because, see, right now, every trader that's looking at the euro dollar is thinking the exact same thing we are. This isn't brain surgery that we're performing here. It's a very simple process. Everybody's looking at it saying the same thing. It's dropped so far, I don't want to short it, so let's go ahead and get long, because our risk is manageable. So if we break through this support, that's going to trip a lot of stops of traders that are getting long down here, because everybody's thinking the exact same thing we are. So again, support right now comes in at 1190, which will be that's key support. So I'm going to write that down. 11190. Critical support. Remember, yesterday we wrote down support as being 112, so I think we were pretty spot on. Okay, that's those the number we wrote down yesterday. Now the resistance we wrote down yesterday, I believe, is 113. That is still resistance today. That is where I'd prefer to be on the short side of the euro. Okay, if we can get a rally to 113, I would like to be on the short side up there. So if you look at, okay, I think that's going to be key resistance. We are still in a range. What I am trying to illustrate for you right now is I don't think there's a whole lot to do with the euro. I'd rather be short here. Or I'd rather be short down here on a breakdown. You know, for me to just to be long the euro dollar, it's not really my cup of tea. I'd rather be long against, you know, other currencies, which you see that I just recently shorted the Kiwi. So, and I'll show you here the reason why here in a moment. All right, so anyway, there's the euro. Let's go over to the cable. Now, the pound yesterday, as I pointed out yesterday during the Lunch Money webinar, you had to have been listening on the Lunch Money webinar yesterday, and I was pointing out that even though the polls kept coming out, you notice how the pound was making brief new lows. There was no follow through to the downside. That meant to me that the pound was getting a little oversold. You know, everybody understands that the Leave camp was you know, the Brexit camp was you know, gaining momentum. We already knew that, but the pound was not giving us any downside fulfillment, if you will. We weren't really fulfilling our obligations where we should have been breaking lower. So because of that, we came out of a descending wedge, which gave us this recovery, and that's the recovery we're in right now. Now, does that mean I want to get long the cable right at this moment in time? No, it's kind of like the euro dollar. I'm not really excited about trading the cable. Would I like to short the pound? Sure. I would really actually enjoy shorting the cable, but not here. I'd rather short the pound when we got up here. So if we rally to 143.50, which, as you guys probably recall, this is, remember the range we'd been in for so long? Do you guys recall this from last week? Our range was from 146 to 143, right? 143.50 rather. Okay, so we have 143.50 up here, and 140. It was like we were talking about 146, 147 when we were right here. We were like, that's our range. Well, once we broke down that range, that's great. And if you weren't participating on the short side there, why in the hell are you going to participate down here? You know, after we've dropped, you know, 500 pips in just a couple of weeks, you go ahead and chase it down there. Not me. That's not my cup of tea. I'd rather sell a rally now. So any rally up to 143, whoops, any rally up to 143.50, I'm a seller. Frankly, I think that's going to be a key resistance. Now, I put an asterisk there because I think those are key levels. That's why I put an asterisk. I'm highlighting the importance of that price. Okay. Now, support. Now you have to think there's probably some traders that are on the short side of the cable that are like, oh crap, why did I shorted that a little too, I shorted that, well, it was a little too long in the tooth, maybe down here at 141. They're stuck on the short side now. So the question is, where are they going to try to cover? Well, my opinion is they're probably going to try to cover on any dip back to 141. Okay, so if we can get a dip in the cable, if you're in the camp that now I'm going to say this again. I'm going to say what I said earlier, but some of you weren't listening in, so I'm going to say this. When you see these Brexit polls, and like let's say you got 45% say stay, and then you have 55% that say leave, and then you got 10% that's undecided. Well, the undecided, in my opinion, are stay votes. They say they're undecided, but when push comes to shove and you put them in front of a poll, they're going to say, well, we like the status quo. We don't want to disrupt anything. Let's just stay. I believe that the stay camp would be more inclined to vote to stay in the status quo. Okay. What does that mean? Well, that means to me that these polls are very, very close. And it's going to come down to the wire, guys. I mean, I was talking to Nicola Duke yesterday, which, by the way, I am going to bring on Nick Trades next Tuesday on the Morning Edge, just so you know. Matter of fact, I'm going to tweet that here. Uh, Next Tuesday, I need to tweet this because I'm holding her feet to the fire because I did talk to her yesterday. So next Tuesday, the 21st, the 21st of June, join at Nick Trades on the Morning Edge webinar as we discuss the Brexit vote. That's going to be a do not miss a do not miss event. Okay, so she's going to be joining us, and we were talking about this yesterday about how close the polls are, and she was also discussing. I'm not going to steal much of her. I don't want to steal much of her thunder because I want to let her talk to you. I wanted to let her talk to you about this, but she's like, it's even the vote's not set in stone. So especially if it's going to be, if it's really close, there could be a contest of it, and so it's not clear. It's not clear, especially if it's going to be a really close vote. Regardless, I think the cable is very choppy, and even though I traded the pound Swiss on the long side yesterday, I have told you guys the last several days I'm very reluctant to trade the cable right now, and that might have been the position that I cleared out today. That might have been my last time I trade the cable ahead of the Brexit vote, in any way, shape, or form. Okay, so I might be done with the pound. I'd have to see a very extended move, and I think I told you guys yesterday, if the euro pound got to 80 pence, I would probably short the euro pound, but that would be it. I have to be pretty well convinced that that we've extended ourselves a little too far, either very oversold or very overbought for me to play the cable at this point. All right, let's go into the Swissy. Now, one of the things about the Swiss franc, and ironically, I played the Swiss franc on the short side yesterday, buying the pound Swiss. But one of the things about the Swiss franc I've been warning you guys is the Swiss has been under a lot of demand because of the potential of a Brexit. So because of that, you've got a lot of traders that are rushing into Swiss francs because they don't care that the Swiss National Bank has rates at this a negative deposit rate where they have to pay the Swiss National Bank to hold money at the SNB. They don't care, not in the near term. I mean, no one wants to hold the Swiss long for any extended period of time. Like, I'm not gonna, if I was an institution, I'm not gonna park, $500 million at the Swiss National Bank and sit on it because I'm paying interest on that. I'm not going to do that. But in the near term, if I want to keep my money safe, I'd rather park it there. I don't want to really own gold. I'm not sure if I want to deal with the dollar with the Fed. Not sure what the Fed's going to do here. So I'm just going to park my money with the SNB. Fine. I'll do that near term, and I'll do that for the next month. But I'm going to tell you this, and I'll say it again. If the UK votes to stay in the EU, I am buying the pound Swiss. I'm buying the euro Swiss. I'm going to sell Swiss francs. I'll probably even buy the dollar Swiss too, but not until then. All right, and you can see the Swiss franc is really outperforming right now. I mean, the dollar Swiss, it looks like crap. All right, now can we fall further in the dollar Swiss? You bet. Dollar Swiss, I think key support is going to be coming down at 95 cents. If you take a longer term view of the dollar Swiss, okay, big trend line. This is a weekly chart. You can see here, let me remove all this crap here. You can see that any move down to 95 cents, maybe even 94 cents, it's going to be, I think that's going to be an opportunity to be on the long side of the dollar Swiss. It's just, are we going to get down there? And I think the possibility is ahead of the Brexit vote, especially if the Leave camp continues to gain strength and momentum. We could continue to see the Swiss franc gain some strength, right? The other thing that I've got to note here about the dollar Swiss is notice the lack of upside follow through. I mean, we may have seen some dollar strength come through the market. We've seen the dollar strength. We've seen the dollar bounce back against the Kiwi, the Aussie, the Canadian. We've seen the dollar, strengthen against the euro. We've seen the dollar strengthen against the pound. We have not seen the dollar strengthen against the Swiss franc. That is very, very much a sign that people are worried about this Brexit vote. It's not a laughing matter, if you will. All right, now if you take this last move. I'll take this spike low here up to the highs. We stopped at 127% extension. 161% extension, it comes in below 95 cents. This is a doable move to come down here, to revisit these lows. This is doable. I'm not saying that we're going to do it. I'm just saying it is a possibility at this stage in the game. Okay, especially if you extend out this trend line here. Not that. Dang it. Stop. All right, there we go. All right, you extend this out. We could very easily come back down here and test these levels. I'm not saying that we're going to today, but I'm just saying that it's possible. All right. I think our levels are very well defined, our support and resistance. Resistance is key right here at 96.75. Support is at 95.75. And I think those are the exact same prices we wrote down yesterday, right? If I'm not mistaken. Okay. We're in a range. Have my eye on these Canadian pairs, guys. I'm still long the Aussie Canadian and Euro Canadian, just so you all know. But I'll talk about that in a little bit. Dollar yen. All right, so here's the dollar yen. All right, now the dollar yen, as you guys know, we've been holding well above the. Okay, we're holding well above the 105.50. Now, everybody here that listens normally knows how important 105.50 is. Head and shoulder completion. Breakout point, at this point a double bottom or key support. 105.50 is, I know I don't have to accentuate it anymore, but I'll do it anyway. I did this yesterday, multiple asterisks there next to 105.50. If we break 105.50, there's a couple things that are happening at that point. A, risk aversion is picking up aggressively, okay? B, the yen pairs are dropping aggressively. The yen is strengthening aggressively. If we drop below 105, I think then we could probably see 100 yen relatively quickly. And then I think the risk of the BOJ stepping in and being proactive with some sort of intervention efforts becomes very high. Okay, but 105.50 is huge, and like I said yesterday, you can and I said this when we were down here yesterday. I said, look, you can get long the dollar yen if you want to. I'm like, you can get long the dollar yen. You know where your risk is. The risk is below 105.50. If it breaks below 105.50, you put your stop down there. You get out. You reverse. You do whatever you got to do. But I'm going to tell you, if we break below 105.50, that's going to open up the door for me and you to short every yen pair out there. Euro yen, pound yen, Aussie yen, New Zealand yen, Canadian yen, you name it. Those yen pairs are fair game if we break through there. Now, as far as what we're dealing with right now, here, let's get rid of this. We don't need this right now. Let's remove that. Let's remove that. Let's take this trend line here. And let's figure out where resistance is today, because in my opinion, the dollar yen can still rally a little bit to 106.60. Now, if we break above 106.60, it's much easier to say than, I'm sure it's much easier for some of you to say that than myself. If we break above 106.60, that will take off the downside pressure. But right now, there's a lot of downside pressure on this yen. Barely is holding up. Okay. It is bearish. Let's go over to the Canadian. Now, like I've explained to you guys before, the Canadian, I have Euro Canadian long exposure, Aussie Canadian long exposure. I'm not long the dollar Canadian right now. However, if we break through, and I'm going to say this, and I'll say this very slowly, if we break through 47.50 in crude oil, I will get long the dollar Canadian. I'll get short Canadian universally, almost across the board. Now, why would I say that? Well, if you take a look at crude oil, this is our crude chart, and you guys know how important this chart is to me. We came out of our ascending wedge already. We were testing support, 47.50. I told you 47.50 is by far the biggest number around in the markets right now for crude. We have inventory data coming out later today. API data showed an unexpected build. So that means crude oil inventories might show a build too. And if it does, and you notice the low yesterday was 47.50, if we break through that it was 47.55. If we break through 47.50, which we've been looking at for the last few days, if we break that, that will open a door for a move back down to 145, or excuse me, to 45, which is the channel bottom in crude. Crude is in an up channel. It's in an uptrend. But the bottom of that trend comes in at 45. So if you go between 47.50 and 45, if we drop, that puts the dollar Canadian back at 130 or even higher if correlations continue to hold. All right, so that's why if we do break below 47.50, that really opens the door, in my opinion, for the dollar Canadian to stage a pretty significant rally. So at this point, 129 is key resistance. Okay, I know we haven't been that high yet. I think we went as high as 128.70 something, 128.77. But yeah, a move above 129 would be very bullish, and it would squeeze a lot of people. You would see this, it's a 50% retracement of this move, but this last move down, but it's just going to squeeze a lot of people. Okay. Support, as I told you guys yesterday, dips down to 128 are probably going to be very well supported. So I'll write that down. 129 is key. Okay, 128 should offer near-term support. If this is your first time to the Morning Edge, I want to welcome you. We broadcast for 2 hours on this particular webinar, but we broadcast all day long for the most part. Paul Franco starts an hour before me. We go all the way until the equity markets close. We have a London calling webinar from 2:30 a.m. Eastern to 4:30 a.m. Eastern every day. Chris from Hawaii, he broadcasts that webinar. So it's free. You guys are always welcome. Same link that you used. If you put in your correct email, you'll get an email reminder every day from Citrix. Anyway, I do put you guys on hold every 25 minutes or so to take a 5-6 minute break just to go grab some coffee, tea, water, whatever you've got to do. So I'm going to do that right now. We'll be back in a few minutes. When we come back, we'll do the Kiwi, the Aussie, dollar index, peso, Swedish krona, Norwegian krona, and then I'll be addressing questions ahead of today's data dump. So don't go anywhere. Thanks everybody for being here. See you back here in a few minutes. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I want to welcome you all back. I just, we got to really get cooking. I was just looking at the time, and I need to make sure that I get all this analysis done ahead of today's data dump that's coming out in about 20 some odd minutes. So here's the Kiwi. I did sell the Kiwi already. I started shorting it at 70.40 is basically a half-size position I have, and any move up to 70.70. This is what we drew yesterday, but I'll just redraw that and just move everything over. Okay, so yesterday we talked about support coming in at 69.60 right here. We hit that in Asian trade almost to a T. By the way, when we hit that last night in Asia, I got out of my Euro New Zealand long. I got out of my New Zealand dollar. Did I? I had some other shorts in the new. No, you know what? It was only the Euro New Zealand long. That was all. That was it. I got out of the Euro New Zealand long at that point. Kiwi bounced, and looking for a move today. I already started. I already started getting in some short Kiwi up here, but any move up to 70.70, like I drew out yesterday, same thing today. Any move up to 70.70 will be a place to be on the short side for those of you that want to. Like I said, I'm already starting to nibble my way in, and then obviously we proved support being key at 69.60. So that's and I'll tell you what, if we break through that, that's going to be a lot of disappointed longs. Lot of disappointed longs. You guys recall, and I don't have to say their name, but website pointed out on Friday how very bullish the Kiwi was. A lot of open skies. Well, the Kiwi turned pretty quickly, and unfortunately, I think it's trapped a lot of traders on the long side right now. So, in my opinion, anybody who's long right now, especially who got long post RBNZ, they may be holding on for this 38% retracement, and their view is, okay, if we break a 38% retracement, it's not a shallow retracement anymore. We break a 38% retracement, it's going to really open up the downside. All right, and my reasonings for being short last week at the RBNZ was because we hit that resistance, a 618, a 38% retracement, a 618, and also channel resistance. We had 5 levels of confluence hitting the Kiwi when we were above 71 cents, and that's why I shorted it last week there. All right, now I've already scaled out of my New Zealand shorts aside from my Aussie New Zealand little long that I have, but I'm already starting to get back in. On the short side, I think the Kiwi dollar is going to be one of the biggest disappointments out there for longs, personally. Okay, so if we break through this 69.60, that is going to be very significant, because that's where anybody who's long the Kiwi probably has their stops situated below there now. All right, let's go over to the Aussie, the Aussie dollar. Okay, so the Aussie's been kind of a big hot mess, and I really have not been too excited about trading the Aussie. But yesterday, we wrote this down. We were here. We said, hey, any move back up to 74 cents is probably a good short. Any move down to 73 cents is probably a good long. So for those of you that are interested, we hit 74 cents. 74.07 actually is the high. It's not bad. We talked about that yesterday, okay? So I leave my stuff drawn from every day, guys. If you're new and you're like, the webinar is recorded, so you can listen to yesterday's webinar if you want. Ziggy is so kind to record these webinars every day. He does it upon his own free will, and then plus I leave my drawings that I draw here, I leave them on so you guys can see what they did tomorrow, especially if I'm drawing on them. Now 74 cents I think is still going to be key resistance. Again, I'm actually long the Aussie. I own a little bit of Aussie New Zealand, and I'm long Aussie Canadian right now, so I'm actually long the Aussie dollar. I'd actually benefit if the Aussie just ripped up to 75 cents. I just don't think that's going to be the case. Okay, I really don't. At this point, 74 cents is obviously resistance, or 74.10. Okay, it's resistance. Beyond that, we can start to get a much bigger recovery, and I still think any move down to 73 cents is probably going to be decent support. But it looks like we're supported at 73.30 right now. For now. And I'm just going to write that down. They're not great support or resistance levels. They just are support and resistance levels. So support 73.30. Oops. And then 74.10. and we're in range. Okay, dollar index. So the dollar index, we rejected at 95 cents, as we noted yesterday. We went as high as 95.04. That's pretty good, okay? Support, just in case the FOMC brings out the dollar sellers following the FOMC, support's going to be down here at 94.28. So I don't think anything's really changed. 94.25 rather. 25, same numbers as yesterday, basically. It is actually the exact same numbers we wrote down yesterday, I'm pretty sure. I'm sure you guys could attest to that. All right, now the peso. Now this sucker's been crazy. I actually bought it yesterday. I bought the peso yesterday at 18.96, and I sold it at 18.96. I just sold it for break even. Thing about the U.S. dollar Mexican peso, this thing is, if the market goes risk off, okay, in any way, shape, or form, this U.S. dollar Mexican peso is going to go freaking bananas. All right, if stocks continue to sell off, we're probably going towards 1950, if not going to 20. Okay, now me personally, I'm excited to really start shorting the U.S. dollar Mexican peso. I want to short it up here somewhere, frankly. I'm really excited for it too. I think it's going to be probably my trade of the second quarter, or second half of the year, is doing this over the course of the next 2 months. And that's going to be the trade for me. That's exactly what I'm looking to do. All right. Now I'm going to remove all this stuff. Let me delete it really quick. The scary thing about the peso is it looks very, very dangerous for shorts. Okay, it really does. And anybody who's short right now is like, oh my God, just, if we can just dip back to 1870, I just want out. Right? Anybody who's short, think about that. Think about this. You shorted the peso. You're like, oh man, here we go. Oops. You shorted the peso. Oh, dude, we're gonna roll over. This thing's going back to 17. That thing went so far, so fast up your rear end that you can't even see straight at this point, right? You can't even see straight at this point. It just rallied so far and so fast. And right now you're going, oh my God, what am I gonna do with this thing? Right? So now any dip to 1870, because I'm always trying to think about what traders are feeling on the other side of the market. And I don't have any peso exposure. I'm just saying, if you're short, you're going, oh my, okay? Like, I can't wait to get out of this thing. And if you're long, or if you're looking to be long, 1870 is the place to do it. If I want to be on the long side of this thing, I really would love to be on the long side right there, because I think they're going to continue to really jam this thing higher. All right, resistance is 1902, okay? Because if we break that, then it's just going to continue to squeeze. It's going to continue to squeeze higher. And as we all know, it's bullish. US dollar Swedish krona, or Norwegian krona. I'll just do that one next. We pulled back from resistance, looking for a dip down to 825. I don't think anything's changed there. Let's just move that out of the way. So dip to 1825 will be a nice place to be on the long side. Resistance is 1836. 8.25. 8 point. That's key, because if that breaks, then this thing is going bonkers. And realize that the U.S. dollar Norwegian krona, we completed a head and shoulder pattern to the downside, and now it's trying to do a recovery. U.S. dollar, Swedish krona. This thing is strong. It was just hitting highs earlier today. Okay, it was just hitting highs earlier. That to me really, really, is showing you how strong this is. If the euro breaks back through 112, here, you know what? Let's do this. If the euro breaks back through 112, this thing is going to go crazy. That is 838 support that we wrote down yesterday held, right? $823, $838. All right, guys, your bias chart is finished. So go ahead and take a picture. It's done. Okay, bias chart is done. Let me take some questions. All right, first question. We got some time here. So first question comes in from